Hey traders, Marcello here, founder of the Day Trading Academy. Today we're answering why investors make more money than traders. Jewel, thank you for the question. If you guys have any questions, don't forget to put hashtag AskMarcello. Don't forget to subscribe also here to the channel. And if you guys have, and actually this is a really good question in regards to why investors make more money than traders. If you guys have any comments on that, go ahead and leave it down here on YouTube or Instagram, wherever you guys are watching this video.
Why do investors make more money than traders?
So I personally think that traders actually make more money than investors, Jewel. I looked up the 7 richest investors on the planet, and I think we need to define kind of what a trader is and what an investor is, right? An investor is somebody like Warren Buffett. Warren Buffett is somebody who invests in companies, not in stocks per se. He does both, but he literally buys out companies and then uses the companies to buy out more companies, or invests in stocks, gets the dividends, and then invests somewhere else. I think there's kind of a really gray area in terms of the definition of what an investor is, so to speak. So I'm going to kind of try to classify these so we kind of are on the same page, right? So Warren Buffett, I would say, invests in companies, in the stock market, stocks, right? And then I wouldn't say he never really trades. Those are the 3 things that I would say are the different types of investments or traders that we're talking about. Really, at the end of the day, it's about long-term or short-term trading. So investing in companies, I wouldn't call trading at all. That's more literally investing in a company. Then you have investing in stocks, which is kind of like trading really long-term, position trading, so to speak. And then we have short-term traders, which trade either intraday or a few months at a time, or a few weeks at a time, or a few years at a time. So Warren Buffett, I think, is probably at the heap of this entire list. And he obviously, I think, is worth now something crazy like $90 billion. I looked up a list on Forbes, the top investors or the richest investors of all time. And I think that there's always a bell curve, right? Where you kind of have these extremes of people that make a lot of money. And I don't know if there are a lot of other investors like Warren Buffett that have gotten to be to the level where Warren Buffett is actually at. Whereas if you actually look at the other people who are on this list, they're literally actual traders. So George Soros got up to $20-30 billion. You have Carl Icahn, which is worth $17 billion, it says here. He obviously now is investing more in companies as well. Ray Dalio, which owns the largest hedge fund on the planet called BlackRock, he's worth $15.6 billion. There's a lot of people on here that actually trade rather than invest. But to really kind of define the differences, trading is a lot higher risk and it's a lot higher pressure, but there's a lot higher reward as well. So George Soros, along with the guy that he created the quantum fund with, which is Jim Rogers. Jim Rogers, for me, is one of the traders that I most admire because, he's made a few $100 million. He's worth probably a few $100 million. I met him on my birthday last year. But he really knows kind of what quality of life is, right? I think he kind of realizes that life isn't all about money. It's really about being able to kind of have your freedom, not necessarily make all these millions of dollars. And he literally retired in his 30s. He has 2 world records of traveling around the world, one on a bike, one on a Mercedes-Benz. So I admire him more than anything because I think even him, for example, made his money in the quantum fund. Him and George Soros started the quantum fund, which gave people 30% annualized returns when they were running the quantum funds. They made George Soros made $1 billion profit breaking the Bank of England. That's his nickname. So I don't know if I would necessarily say that investors are necessarily making more money than traders, because I think it's a little bit subjective, and also we'd have to apply it in a time frame, right? George Soros made $1 billion trading against the Bank of England. I don't know too many investors that have made $1 billion in probably a matter of months. So I think at the end of the day, both work, both can be very lucrative. Obviously, I always want to put the asterisks in there. Make sure you guys know that trading isn't easy. You can lose a lot of money. I borrowed a lot of money and lost it all, so you could definitely lose a lot more than you have, and I want to make sure that you guys know that. But it's important to realize that whether you want to learn how to invest or whether you want to learn how to trade, for me, it would probably be a lot easier for you guys to learn how to trade rather than invest. Because I think learning how to trade, there's just a technical aspect to learning how to trade where it's literally lines or, trend lines or, things like that, rather than when you're learning how to invest, there's a lot of other macro dynamics that we have to learn. For example, what does this company in China affect the business in the US that affects a company in Brazil that in turn makes the stock go up in the US company? And now, for example, we have the situation where we have a lot of the trade tariffs that Trump and, this trade war that we're starting to get into between Trump and everybody in the world, where Trump is starting to impose the tariffs on other countries like Mexico, Canada, Europe, and even China, and they're retaliating with other tariffs of their own. And in those situations, we have to kind of think of, well, if they're putting this tariff, what market does that affect? And then if China's economy is going to fail, if that's going to affect Europe. And see, there's a lot of moving pieces. And in my personal opinion, being in the markets almost 17 years now, learning or teaching or trading, I think it's a lot harder to learn those different macro dynamics, whereas it's a lot simpler to actually learn how to trade, because it's literally no news, no it's what's going on outside of the world. It's literally just a matter of choosing a market, learning how to get in, how to get out, and then, dominating things like psychology and risk management and those kinds of things, which I know I make it sound easy. It's not really that easy, but, I do want to just reinforce the fact that I do believe that anybody can learn how to do this. It's just a matter of what you want to sacrifice, because obviously if trading was that easy to learn, everybody would be a professional trader and everybody would have their yachts in the Bahamas and everything. So I think that's probably the best way I can answer your question, my man. Jewel, I don't necessarily think that investors make more money than traders. It just seems that way because Warren Buffett is kind of on that extreme and he's kind of the most popular guy. I do believe that you can actually make more money short-term trading rather than long-term investing. It's just a matter of fact of it's a lot more maintenance, right? It's a lot higher, it's a lot more work, it's a lot more pressure. You can lose a lot more money as well. So let's keep that in mind as well. So good question, Jewel. Thank you. Any other question you guys have, don't forget to leave the questions with hashtag AskMarcello. If you want to follow us on Instagram, it's Wandering Trader, WAND, and we'll see you next time.